Good morning, everyone. Welcome to the Eurotrade. I'm Marcus Okadi, your host. And if we're meeting for the first time, I've been trading for almost 19 years. I'm a commodities trader, so you will see me reference precious metals, base metals, and we also talk about the energies markets that were almost my sole bread and butter product until it started misbehaving. So we're going to stick to silver and copper. Now, yesterday I did end up in profit because I went long on this copper. Now, let's talk about this XFA that I started about 5 days ago. It started a bit sketchy. So it started with me forgetting that anytime you have a newer account, the symbol blocks don't work. So I was looking at silver, and then I entered the full silver trade. So that was the first day. Not the best, because obviously you want to make sure that you're trading products within the constraints of the actual prop account you're trading. So once I realized I was already underwater by like 600, because real silver is like really expensive. It's 25 bucks per tick. So the first day didn't start off too well. But now I'm kind of in maintenance mode just to make sure that I'm not doing too many trades. Obviously, a lot of these will be scaling in and out. So this one was actually 4 trades. It wasn't 10. It's just the way the platform counts them. And I get a lot of questions about not having a daily loss limit on this particular account. But you will notice that I have something else. I have this, trade limits. Now, sometimes if it's a range day, I may increase this to about 12, just to account for the fact that I will trade more on that day. But this is effectively my daily loss limit. So if I've done 6 setups in the day, this will block me from doing any more. So to me, that's a better way in my head to manage my trading. And I dislike having the daily loss limit where it just allows you to keep trading and keep trading. So the way I look at things, I have really about 3 good attempts, and then if maybe you're adjusting the position, you can actually try to adjust it for a better average. So that would be 2 trades rather than 1. And then sometimes if I want to be in with 2 or 3 micros, I also have to account for the fact that I might enter 2 and then add another one somewhere, and that also counts as more trades in this particular platform, TopstepX. So yeah, we're just in maintenance mode, not over trading or anything, just looking for good setups and waiting for either the smaller days to mount up or to have one bigger day that's going to take you into a safer territory. But the daily loss limit for me is in the form of the number of trades per day. So that's just something that works for me. If you can use that, that's great. How long am I on for? I am usually on for about 90 minutes. So I will be here until around 11 a.m. my time. Right now it's 9:37 a.m. So yeah. All right, so let's have a look at what's going on with silver. Now, I always start my day by analyzing what the gamma exposure is doing. And I wanted to see how the Fridays, so tomorrow's silver data is looking versus the monthly options in silver. Now, what I'm seeing is that it's still very much, and I'll talk about what this trade was as well. The way I like to position myself intraday, if I'm going to have any sort of a bias, it will be based on gamma exposure. We are still seeing some heavy calls being held even after FOMC, okay? So as we get into Friday, into tomorrow, there is a little bit of a put-call ratio increase on the puts, but it's not really that terrible. It's not like everybody's holding some protective puts into Friday. So that's not the case here. I think silver is still very bullish. And if I look at the implied volatility, even though we had FOMC, implied volatility is actually slightly down from yesterday. And that tells me that any pullbacks that we may experience, that will be accepted, healthy, orderly pullbacks. This is why today, even though I may decide to short if we're still Asia bound by COMEX settlement, yes, that might be a short. But if we pull back to Asia low, ADR low, we have value high from yesterday. This is FOMC, right? All of this was FOMC. But even so, we had the value high matching the zone in between the call wall and the ADR low. Because of that, this is where I want to be a buyer. So it's very likely that at some point we may tag the value high, but I don't want to be short into that. In fact, I want to avoid that move on purpose because it's against the trend and it is a counter trend that would be dangerous, especially earlier on in the session. It gets very volatile. You can get stopped out in a blink of an eye, and even on a micro, silver is pretty expensive. So you can't do a whole bunch of grasshopper trades where you're just in and out, in and out, in and out because it's so expensive, right? It's $5 a tick. A lot. It's a micro, but it's not really a micro, right? You still have to risk between $200 and $400 per trade. Now, obviously, if we look at full silver, just don't trade it because, you've seen what happened to my first day where I didn't notice immediately that I was in a silver. And I was only in for like maybe 2 minutes. And, immediately it just put me down 600. And then I tried to get out of it. Didn't work, right? Because I was like, oh, God, you can go on a little bit of a frustration. It's like, why did I do that? And it's best to just kind of take it on the chin, come back the next day, reset, and then trade whatever you see, as if the previous day didn't happen, right? Now, obviously for me, I do tend to have better control of the emotions when those kind of events happen. So it's not like a disaster. It's not like I put, $3,000 hole in there. And as you can see, I'm still positive. And I kind of piped down after that and went, okay, let's just be super careful here, block the big silver and carry on. Now, this trade happened overnight, so my Cavalier was coughing. He's got MVD, which is a pretty serious heart disease. He's old, he's very old, but basically he woke me up. So I got up to give him some meds, and then I was like, let's see what Asia is doing, because it was around 2 a.m. And right around 2 a.m., I saw this reversal. This is something that happens once Shanghai Exchange starts trading, and that happens at 1:30 a.m. my time. Typically, Tokyo will do a fake out move first in the run up to the Shanghai Exchange Open. This is specific to metals. I'm not sure how much effect Shanghai Exchange will have on something else like equities and stuff. But I thought it was a good opportunity to fade that. So I went into a Shanghai Open reversal. Super drama free. It dropped. I closed it and went back to bed around 3:30 a.m. And that was it. So now I'm going to wait and see what they want to do with this call wall and with the ADR low. If that doesn't happen, maybe, just maybe, we get another swing inside this Asia swing. So again, you have to have contingency plans. So right now, if we drop all the way down, you will have a new reference high that's almost an equal high to this little starter point. And then you want to make sure that you're waiting for the inside high or inside lows to be taken out before engaging in any trades. That is where liquidity lies. And it's almost never that it's like random place. It's always some kind of an open interest from the options chain. And, you have VWAP. VWAP in many products is a benchmark for the price. Copper is a little bit different when it comes to price fixing. And it actually does use VWAP at, I think it's 1:35 p.m. So 35 minutes past 1 VWAP. That becomes the copper fix. So it's very different from the actual price of gold that happens at 10:30 and at 3 p.m. that becomes the AM and PM fix, and then for silver it's just 12 p.m. fix. That's it. And they use the actual price. They use the average between the previous minute and that minute, and that becomes the fix. And yesterday we saw in gold that London fix at 10:30 a.m. brought us that reversal. So here it is. Obviously it pales in comparison to what FOMC did, but if you only had this to look at, so let me just block this one. So if you just had this to look at when we were doing the stream yesterday, and I put this down going London fix sharp reversal ? That's what the London fix does. Now gold also has another PM fix, which is at 3 p.m. and you could expect the same thing. You could expect a reversal from that point. There's also a couple of other things happening around 3 p.m. So yeah. You have the Forex option expiries that also happen at that time. So all of that pushes the knock-on effect of this reversal potential at 3 p.m. So if I'm looking for any sort of continuation trades, I will typically wait for the euro trade close and then see if there's anything there. If I'm looking for a reversal, then yes, 10:30 and 3 p.m. on gold will be the times of day. Now silver is a little different, like I said, so 12 p.m. would be the time to look for reversals. If it then continues, I do not enter trades. I will wait for COMEX and euro close. Time of day is very important to me. So because of these, almost like clockwork, you can set your watch by some of these events. And of course we had an outlier day of FOMC, a lot of drama, and this is way more dramatic than what was happening in silver and copper. So I'll just show you. And of course copper was reactive because there was a lot of talk about inflation. Copper is a very sensitive product to any inflation talk, because these days hedge funds have actually moved on from using gold as a protection from inflation, so now they're using copper instead. And that's why you see Powell mentions inflation, it goes blue, blue, blue. Okay, let's trade it. And it was a very smooth trade. I waited until he was talking and until we made sure that, some of the price actions stopped being super crazy. And then it just started rising. So I stayed in on that until the end of the day, and that pulled my day out. But I traded very late. Like I said, I traded probably about 15 minutes after he started the press conference. He started mentioning inflation and it started reacting. I saw it on tape. We had overwhelmingly positive delta as well at that time, and I thought there was a good way to there was a good chance that we went over VWAP and held it, even though at the first try they failed, but that was right after the rate decision, so you don't trade that. You wait until things settle down a little bit, until he starts talking, and then you enter a position. So I never trade into FOMC. I will never go into it with an open position. But in the same vein, silver and copper are not nearly as insane as equities and gold during FOMC. So they're a little bit more palatable. The price action tends to be more stable. And that speaks to me as somebody who is in mid-40s and the brain that is slowing down and needs time to figure out what to do. But yeah, it worked out, and we're now back on the right track to get this XFA back into the running. But yeah, so slight drama in the beginning. But we'll see what happens. I have another XFA, so that one's doing better. But we'll see what happens into the end of December, because I don't like anything that's less. Even 5 days, it means nothing. So I want data that is at the very least 2 weeks, and then I can reevaluate whether what I'm doing is actually working, whether I need to change products, whether I need to tighten the risk, or maybe even expand the risk if things go well. But yeah, so hopefully you derive some value from that. I know many people who have the first day in an XFA that doesn't go well, and then they just keep trading and keep trading and keep trading. And then the second day they're in the hole, they've got like 30% left of maximum loss limit, and then it's difficult, right? Because then it affects you psychologically, and you can't make rational trading decisions because you have this thing that you did yesterday that affected you. So I always try to stop, even if I mess things up. In the beginning, I try to stop at $1,000, and it's like, okay, well, that's not very good. So I don't allow it to get to, you know, 2, 3, 4 grand, and then it's like, oh my God, what have I done? So yeah, just keep those pointers in mind. Today, I don't know whether I'm going to trade copper, because we pretty much had the move that they were expecting. In the long run, I'm still bullish on it because we started going into a trend. So if I show you the weekly, we are tagging yet again. We're tagging the previous established weekly high. And if they manage to not close this week into that area, more longs should be on the table. But until that happens, I kind of want to chill and just observe where they're going to take it. Obviously, if I have something that is just an eyesore and staring me in the face, like, I will trade it, but I do want to sort of be long. But I'm open to the possibility of copper falling into the range and then rotating back into this former reaccumulation area. Silver is just crazy on the weekly chart, so it went into yet another all-time high. That seems to be happening on a daily basis now, almost. So I also want to trade with that, unless we are close to settlement, we're still inside the Asia range, in which case the Asia high becomes a liquidity grab point, and then you can fade it into settlement. Until that time of day, I am not interested in any shorts, but again, I stay open to the possibility that both sides of the story can play out intraday. Looking at the gamma exposure and the options, that is a little less likely, but again, we have a little bit more of the put call to the downside as we get into Friday. So yeah, we'll see. We'll see what's happening. Let's get these levels back in and let's expand the silver chart. So what did Asia do? It went into a new all-time high, established a new high, reversed for the Shanghai Open, went all the way down, went almost into the previous range from the London session from yesterday. And now it's just in a holding pattern. So we need to wait until one of these more significant levels appear, rather than taking a punt in the middle of the middle. So this is, to me, very bad, because we're in the middle of the range. I don't really see a trade yet, and you guys know if I see a trade, I will trade it. If we don't have a good trade, we just stay out. You don't just click buttons because you feel like it. So yeah, let's see what they want to do. We're going to wait for the London fix today. So it is Thursday. But there should be some opportunities post-FOMC. Some days they can have hangover days where, you know, they had a big move yesterday and they almost kind of go on holiday. They're like, well, we made our money yesterday. And then you end up with a really boring range-bound day. That could happen, of course. But Asia was still very, very lively. So I'm kind of hoping there's a bit of juice from all of this activity to keep moving silver. And again, silver has been a better, less dramatic trade than gold. So if we have a look at gold, it's still range bound, right? So weekly chart looks a bit terrible. Yuck, right? Until that changes, gold is going to be spiky and annoying. So that needs to, we need a market condition change there. But yeah. And again, if I look at what Asia did, looks pretty similar to what silver did, but somehow this reversal to me looks very messy, and it lasted for 2.5, 3 hours, right? Whereas silver, very clean, went up, established a high, reversed, and then faded. To me, that's much less dramatic than, noticing that we went above the Tokyo high, then we reversed, and then you wait for 90 minutes before you actually get the move. That's rather painful, to me at least. So silver was the more obvious trade there. And normally I don't trade Asia, but I just happened to be awake because my dog was coughing. And obviously I got worried about him, so I wake up and I'm like, okay, well, I'm not going to be sleeping for the next 90 minutes. What to do while I wait to see whether he wants to go outside or whether he wants to go back to sleep. Then I have to measure his resting heart rate. So, you have to wait until he's asleep, and then you have this app where you tap on the thing as he's breathing. So I had to track all of that because we are putting him on some new meds now, and he's on new meds. He's doing well. The coughing has diminished, but for some reason yesterday, overnight, he decided to go into a coughing fit. But then his resting heart rate was pretty good. So, I don't know. It's weird. It is 12 p.m. UK time, GMT. So in Eastern time, that would be 7 a.m., I believe. Yeah. So 7 a.m. Eastern is the silver fix. Let's just mark this on gold as well, just in case people are trading. So obviously we're going to have another London fix, so this can be deleted. And we're already seeing the that range that gold really loves to do for this time of the day. So at the moment I'm not seeing much volume. So if I show you the volume on gold, it's well below the average. So again, until that changes, there are no good opportunities to be had. Why don't I have the moving average on silver here? Here we go. Yeah, so silver looks even worse. So while gold is kind of tagging the average of the volume, silver is well below it. So we need that to change. You don't want to trade when the volume is just non-existent. Oh, there he goes again. You okay? That's your heart failure cough that you're hearing. All right. It's okay. So yeah, he does cough more when he's lying down, then he gets up, then he has a bit of a cough, and then he lies down. We do have him on a new drug called Entresto, so fingers crossed it's going to give us a little bit more time with him. But he is old, he is a Cavalier, and he's 13. So in Cavalier years, he's ancient, because most of them just live until like 9 or 10. So we got him to the early teens. And I'm going to be broken completely when he's gone. But his decline has been very slow. Like with my previous dog, my first boy, he was like vibrant for 15 and a half years, and then he ate something in the park and then just went in 10 days because it trashed his kidneys. And I was like, dude, what have you done to me? But Lenny has been sick for, he's had MVD for 3.5 years, and he's been remarkably stable, and only now he's kind of entered that early stage. So it's a difficult time in my life, so that's probably why some of my attention is kind of divided all over the place. I'm not sleeping that well because obviously he wakes up in the night and he will be walking around and he coughs, and then I'm awake because I'm a female and we are like wired to hear babies crying, so I always hear higher pitched sounds and it just wakes me up. My husband just sleeps through it. I was like, oh, Lenny was coughing last night. And he's like, was he? Oh, didn't hear. I'm like, yeah. Yasu Trade says, I'm sorry to ask this, you don't need to answer, but what happened to your legs? So it's not a secret. I used to be an athlete, so I was a bodybuilder. Unfortunately, I decided to take an early booster vaccine for a multitude of reasons. It happened about 4 years ago, actually just over 4 years ago. We just had the puppies, so Lenny's kids. We had beautiful litter of 6 puppies. We kept everybody. I always wanted to be covered in dogs. Unfortunately, around about that time, my dad got really sick, and he ended up in hospital with COVID. So I needed to go travel to see him because he wasn't feeling well and he was in hospital. Now, as it turned out, I never got to see him. He unfortunately passed away just a month after that. But because I was going to travel, I wanted to make sure that I will be let on the plane. At the time, we had Boris Johnson, who said that anybody who's had the booster in the last who's had a second dosage of Pfizer or any kind of vaccine in the last 3 months, that they're eligible for a booster, and unless you're completely boosted, you cannot get on the plane. Let me just let Lenny out because he wants to go out. Long story short, I take an early booster, and a day later I get a rash here. It looked odd, and I didn't know what it was. Called up the phone line that they had, because unless you were imminently dying, they just wouldn't let you go anywhere to the doctor. Nobody was going to see you. And should I have gone to the emergency room? But at that point, I didn't think it was that big of a deal. So again, I end up with a shingles outbreak that went undiagnosed. I begged doctors to look at it, to help me. They wouldn't. And over the course of the next 2 weeks, it started damaging my autonomic nervous system because the viral load increased. Anybody who's had chickenpox in their life, you can get shingles at any point. Obviously, my immune system went haywire because it was an early booster, blah, 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 whatever. I'm not blaming anyone, okay? So as a result of that, I have a disease that causes, it's kind of an autoimmune disease, I suppose, but there's very little research on it. They don't know what causes it. It's kind of like long COVID, a cytokine storm, activation of like bad microglia in the brain. So as a result, I get brain inflammation that sometimes affects my legs. Some people have it in the arms. I have it in my legs. So on those days, I do have a mobility chair because I'm dizzy. I can't stand up. My legs feel like they're not there. So I don't use it all the time, but there are better days and there are pretty bad days as well. This year I've been a little bit better, but I just realized that me resisting aid is not going to make me better in the long run. And it was a terrible decision. I mean, look, nobody wants, especially not me, like I was a bodybuilder, you know, I did bodybuilding pretty seriously for 7 years. So to go from that to be needing basically a mobility aid, it was a tough pill to swallow, you know, bitter pill to swallow. But it is what it is. I feel that it's actually made me more aware of my own energy levels because my energy is very limited. And so I don't use it all the time, but on days when I can't even stand up without fainting or without my legs feeling like somebody's putting electricity through them constantly with no respite and there's a lot of pain that goes along with that, and you just get used to it effectively. So now if I'm feeling like that, I will just sit in my little mobility chair like a Bond villain with my Pomeranian stroking it. And, you know, driving around the house. So yeah, it's something that I'm dealing with. But I'm very fortunate that I'm still able to do some work. And believe it or not, I'm considered to be mild to moderate. Which is hilarious because, you know, you don't have a life anymore. But, you know, luckily this day and age, I'm able to have a remote job. I'm able to be here. I'm still able to trade on most days. Which has changed because I used to be light sensitive as well. Now I'm only sensitive to sunlight for some strange reason. And that disease is called photophobia, which is totally nonsense. It sounds as if you're like afraid of the light. I'm not afraid of it. It just causes me migraines that don't go away for 6 days. But in the last sort of, I would say a year and a half, I've gotten better. And since we moved to the new place, I have been gradually having more good days than bad. So fingers crossed that it continues. But yes, I have been sick for 4 years now. And this disease has taken the first part of my 40s. So am I happy about that? No. Can I change it? No. So what is there else to do? Nothing. You just push through. You take it day by day. And in a way, we can take that into trading as well. So if you can't change something, you can't dwell on it because it's going to kill you, right? You just get yourself into this state of not being kind to yourself and not forgiving yourself for whatever you've done. And then you are supposed to rely on data to push forward. And I do the same thing for my disease as I do for my trading. I look at data, what's helped me, what's harmed me. I run a journal, and then I get, more knowledge about how I can manage this newfound state, whether that's a drawdown in trading or whether that's an energy limiting condition where I have to have 2 naps a day and I need 10 hours sleep, maybe more. It's the same thing, right? So, we have to use some of our more negative experiences to make ourselves more resilient emotionally. And I've always been a trader. I've always been not an emotional person at all. So I'm probably one of the most stable people you will ever meet. So while some other people are pining and they are like, oh my God, I feel terrible. It's like on the days when I feel terrible, I will feel terrible. But at the same time, I used to be a musician. So show must go on. Luckily, I'm a girl, so there's makeup, there's a whole bunch of stuff. There's, there's pills, there's medications. So we just try and do our best, right? And again, if you're struggling with anxiety and with trading and, fear, you might want to consider some medications. There's beta blockers that are excellent in managing anxiety symptoms. But yeah, please don't do it yourself. Go to a psychiatrist that can prescribe something for you if you are finding that you're struggling. Maybe they can do an EMDR therapy on you, because what happens with trading is that you get a lot of psychological trauma. And then you get to trade again, and you're like, oh my God, I'm so afraid. Now I'm afraid that I'm going to repeat the same mistakes. You have to deal with that. You can't just carry on and just go, well, I effed it up last time, so, I always F it up. No, you need to change that pattern. And if you can't do it by yourself, go to a psychiatrist that will be able to help you. Therapy is a vastly underused tool in trading. And I don't think I know any hedge fund traders who haven't been forced to go through some sort of therapy. Because you have to deal with your own gremlins, your own Muppet moments, and minimize them. And if it means, you need a little extra help whilst you're finding your feet and whilst you're trying to be more emotionally resilient, then maybe you need external help. There's nothing wrong with that. Absolutely nothing wrong, especially not in this day and age. Maybe like back in the 90s, when I was a teenager, and even in the country that I come from, if you even said that you're like depressed or anxious, first of all, everybody will laugh at you. And second of all, it wouldn't be considered serious. And then everybody would try and sweep it under the carpet and make a big joke out of it. And then call you unstable, and you would sort of become like a social weirdo in a way. And I think that's changed. So now it's okay to have issues with your mental health, whatever the problem is. I was never one of those people, but I can understand because I've seen it in some of the people around me who have had really bad issues. And yeah, you have to get help. So if trading is causing you a lot of anxiety and you still want to keep doing it, you need to find the root cause for that anxiety. The only anxiety I had was when my legs stopped working and when I was waking up feeling like a gorilla was sat on my chest. That was worrying because then, I would think about having to take dogs for a walk and I would be filled with dread. So that's the only time I kind of experienced what it feels like to be overwhelmed by what's happening to you. So I do understand, but at the same time, I am very likely a lot more resilient than most people. So hopefully that helps. So Flash Golden saying, best therapy, beach, sun, and barbecue. Yeah. So again, I can't do sunlight anymore. So that wouldn't work for me. But yeah, to me it's, you know, video games, dog walk, and just relaxing, like being super, super relaxed. I'm just gonna send a message to my husband because I can hear Letty walking around and I don't think James is awake yet. Because I can hear him from here scratching on the big 6 bifolds that we have in the main room. So hopefully he'll pick that up. All right. Yeah, can I repeat the copper VWAP something? Yeah, so 1:35 p.m., not a.m. but p.m., London time. That is when the copper price fix happens. So 1:35 p.m., where is VWAP? That becomes your reference price point. That's why you see copper has very, very reactive behaviors around VWAP because that is the price fix. So yeah, it's kind of like the same thing as the London fix on silver, except they use an actual time on gold and silver, but on copper they use the actual VWAP for that time. It's a bit of a weird time of day, but I do know why they do it. It's because it's the end of the curb trading. Curb trading on the London Metal Exchange is when they trade all of the metals for 10 minutes. I don't know whether you've ever seen how it works there, but metals are traded in 5-minute increments, and then there's a ring, which is why it's called the ring, that means that the next metal is going to be traded. So they have 5 minutes for zinc, then 5 minutes for copper, then 5 minutes for aluminium, then 5 minutes for, I don't know, another base metal. So it's it's a very distinct feature of the LME. And then after that's done, the morning session is then ended with the curb trading. Why is it called curb trading? Because back in the day, those traders, the metal traders, they were doing their auctioning in pubs, and they got really loud. So it's quite a funny story. So then the pub owners would push them out to the curb, where the curb is like sidewalk, and then they would continue their auctioning, shouting, fighting, whatever, on the curb. So it's called curb trading, and that's 10 minutes at the end of the session. There's a morning and an afternoon session, and I do believe, I don't know whether it happens for the afternoon actually. I need to check that. But yeah, so it's at the end of that they do the price fix. So it's like, okay, we finished the morning session. Where is copper? And that's the time, 1:35 p.m. Where is VWAP? That is your copper price fix. So a little bit different, and something that you should know if you want to trade copper. But again, copper is not something to trade every day. I trade it usually in and around the inflation prices. It's not that there is no no opportunities. Yeah, you can get opportunities in copper, but it moves more when there's something going on with inflation news. So PPI, CPI, yes, FOMC to a degree, and it's probably the calmest product that you can trade after FOMC. But can you trade it every day? Yeah, if you can be okay with the price being a lot slower. And in my eyes, it's more stable. So I actually love teaching people on copper because it gives them ample time to actually decide what they want to do. And then we move them on to the more, let's say more crazy products like silver, maybe even gold. But yeah, so let's have a look at the CL, because somebody's saying there's a CL big order, so we'll have a look at that. Vladislava says first time here. Hello, welcome. How do you determine call walls, and what time zone are you talking about when you're talking about fixed times with frequent reversals? I'm talking about UK GMT times because that is my time zone and that is where a lot of the metals trade. So, I mean, obviously we have COMEX for silver and gold and Asia, but, you know, generally London price fixing is different for each metal and it is always going to be in GMT. There is a website that I can give you where all of this can be found. So let's see, here we go. Okay, so I'm gonna put a link in the chat. Anastasio says, in my opinion, silver is way too expensive to trade on a 50K combine. I agree. I think it's probably even a little more expensive to trade on 150K, which is why, I mean, I generally go for 150Ks these days, just for a bit more room. But if you are not consistent with your performance payouts, yeah, I would stick to 50Ks and maybe go trade gold or trade micro copper. Those are very, very good for the 50K. So you have to stay in line. Okay, so LBMA, it's a kind of a how would I say it? It's not an exchange, but it is to do with like members of the metals exchanges, right? So they are the ones who are setting the prices these days. So you have the benchmarks here. So when they are being established, this is London UK time. So it's set twice daily for gold, once at 10:30 and another time at 3 p.m. in US dollars per troy ounce. Silver price set once daily at 12. Platinum and palladium twice daily, once at 9:45 and once at 2 p.m. London time. So have a read of that. Copper is a bit different. Copper you need to go for, I think, an LME because that's where the base metals are traded. Let me see whether they have something similar on their website. Don't really see that. Clearing, trading, no. Yeah, I don't see, like, it's not as easy to find the data on the LME. Their website is just not very good. So maybe it's somewhere in the intraday data. No. 5-day look back, no. Yeah, I don't know why they don't have that on their website, but it's not nearly as easy to find that. But yeah, it is the LME that does the price fixing on copper. Out of all the base metals, we only have copper, but you know, you can trade tin, you can trade aluminium, you can trade zinc outside of Topstep. In fact, zinc has been a pretty good one recently. But yeah, so I don't know where to point you for that. I'm gonna think about it and then maybe give you a better link where, you know, you have the education. Maybe I should make like a blog post on the fixing prices of metals on my website. That could be something that people might want to read. So just to have like one resource where you can read about the price fixing. All right, so I'm new to Topstep and wanted to check if there's a video or indicator that shows the Asia high, London lows, and stuff like that. Like your chart, I want to do this on ES and gold. Thank you, I appreciate it. So I just use my eyes. I don't have an indicator for it, so I know the times of the exchange. This is becoming a frequently asked question recently. How do you find Asia high and low? Well, if we know that so you need to find the Tokyo times in your time zone. Okay, so for me, that's midnight till 6 a.m. So any high and low that are established between that time, that becomes Asia high, Asia low. And the same thing for London before the next session opens. So if you want to look at NQ or ES, you would just go back for the London high, London low, and Tokyo high, Tokyo low. And then put those markers on. So you have to do a little bit of drawing on your chart. It's not the end of the world. And then you basically get your levels. So that's what I do for about 20 minutes before I come on here every single day. I plot the levels. It also allows me to go through the process of finding out what Asia has done, and it starts to give me a sense of situational awareness, and then I can start formulating my thesis of where I want to be a buyer, do I want to be a seller, and if yes, where and when being the operative word. So yeah, but no indicator. You know, I'm sure you can maybe find one somewhere, but I don't think it's necessary. I think actually doing the grunt work of finding the highs and lows can be a good exercise for you to be a little bit more aware of the price movement and how Asia has acted, basically. But yeah, London high, London low becomes a reference point on days when, let's say, I then turn that into overnight low, overnight high. Let's say that we create a new low for London, and then we get to COMEX, then we smash through that in reverse. So I'm not then going to be using Asia low, I'm actually going to be using the new London low, because that's a new reference point from the overnight trading session. But it's always done for me, looking at the eyes, looking with the eyes, not at the eyes, looking at the eyes of the market. Looking with my own eyes, popping in a horizontal line, naming it, although a lot of the times I actually already have markers, so I just move them to a new one every single day. And it's my little routine that I do every single day. So yeah. Now, call walls, GEX levels, all that good stuff. I take that from Mentor Q, although I do look at bar chart, and I do look at Interactive Brokers chain as well. However, I grab data from bar chart, and here's where AI is actually pretty useful. So I have built an implied volatility tracker, and then every day I will use AI to compare some numbers from the previous days and to basically give me a breakdown of where the calls and puts are, what is the difference between them, and it becomes fairly obvious what they want to do at those extreme orientation points. If you've never done options, they are a little bit difficult to grasp at first, but the main thing is to know whether you're in positive or negative gamma. If we're in positive gamma, you would expect any level with higher open interest in the strike prices to act as some sort of a hedging area. That's what the dealers are designed to do, that's what market makers do, and very frequently these turning points are never really at random areas. Like today, let me have a look at silver. Yeah, so we have 63. That is a pretty big level. Not quite as big as the call walls and GEX 1, 2, and 3, but it is a level where there's a significant amount of people waiting for the prices to go even higher. But the dealers use that area to smash slightly through it just to make everybody annoyed before they reversed it. So what was the defining decision for me going into short? It was the fact that the Shanghai exchange likes to do a Tokyo fake out. So they run through the Tokyo high or low, whichever one is the closest, and then they typically reverse. So if I'm going to trade Asia, I really have to be awake from 1:30 up to about 2:30 a.m., which is nighttime, obviously, for me, so I do like to sleep, but it just so happened I was awake last night, so took advantage of that. Gold pushing hard. Gold pushing hard, hitting a GEX2 and a VWAP, and reversing, and then doing absolutely F all. Chill, man, chill, breathe, you know. We can't be getting excited. Like, I have a puppet that I'm going to share more on my channel, and it's a grasshopper. His name is Hopper McTilt, and he's going to be your excitable, unreliable mentor. That's going to be hilarious. Who gets overly excited when the moves are happening that are not really that big. For example, whoever saw this push, maybe you went into a trade thinking, oh my god, it's a breakout, but there's a GEX2 and this VWAP, like two massive areas that are known in a positive gamma to give huge reversals. This is your dealer play. This is market maker play. They make everybody think that they're breaking out. And then people go into breakout trade, it gets smacked, and then it's a moment of, I'm in! I'm out, because this is a 50, just from VWAP to current price. That is a 50 tick move. It's massive, right? 50 tick move. Let me find my price range here. 50 tick move, just like that, away from the level, which looked like a breakout. It's like, oh my god, we had a reaccumulation. Let's keep going higher. But GEX2 traditionally is the second strongest level that you can have from the open interest perspective, where the calls and puts are located. GEX1 is a bit weird because it can actually act as an accelerator, whether you're in positive or negative gamma. I don't know why, but it's just something that happens, especially if it's like with the direction. If there's a lot of calls there, then they sort of run through it. It just kind of keeps going. But then GEX2 tends to be difficult to break. So, you know, make that make sense. And then in a negative gamma, you actually expect most levels to be run over. So just to keep going. So what I do in negative gamma, excuse me, is to wait until the level is broken, then to get a retest from the other side, and to effectively use it as a continuation level. It's not quite that simple, but it's kind of the gist of what the dealers are doing. And, you know, those are some kind of important points how to trade with the dealers rather than against them. And trading against them almost never works, really, because they're the ones who create all the liquidity. They're the ones who create the pain points, right? They're the ones who will cause you a lot of pain. But then once you start realizing how they're playing things, even if you are on the wrong side of that, at least you can understand why it's happened, right? So, for example, if you are one of the people that went into a breakout thinking, oh my god, it's breaking out of the high, let's go, we're in, and then going, what happened? Why? What happened? You can now know that this was a GEX2, a lot of open interest, difficult to break. So even if you lost, you can just tell yourself, okay, so the dealers are hedging there. All right, so let me make my next trade not a FOMO trade, and let's see if they can retest the 4250. And then maybe, just maybe, an idea, I might wait for a 15-minute time frame rather than a 1 minute and 2 minute to confirm that GEX2 is actually turning around. I actually really like 2, 5, and 10 minutes for this point, for this purpose. We don't have 10 minutes on Topstep, but, you know, obviously I use multiple platforms. So you can use a 5-minute time frame as well. And you can also see it in this moment. So they had a bit of a shakeout, and this is not strong enough for me to call this an exhaustion. It's not anything because it's still not bigger than the other, or not big enough from the other bars that we had there. Every time I want an exhaustion candle, that typically happens around swing highs and lows where those liquidity traps are. And then you typically get, well, here's one. So you see when the Asia high was established. So this was Tokyo high. Same thing as in silver, right? Just a little bit more messy to me. So Tokyo starts trading and establishes a high. Shanghai opens. They smash it through, reverse it, and then you have this little exhaustion volume bar that is not 3 times bigger than the surrounding ones, but it's about 1.72 times bigger than the previous candles. That is an exhaustion candle. If we're any bigger than that, like let's say that we went into 3 times, it's like massive, massive candle, massive bar on the volume, that would be more conducive to a breakout. So that is how I differentiate between a true breakout versus the fake out. But even with a true breakout, I still want to pull back. Absolutely despise trading breakouts. The only time I would trade a breakout is if it's a mean reversion opportunity. They tend to work really well, but they're very specific conditions. Not every trade that opens outside of value is a mean reversion. Quite often it's actually with the trend. So you open outside of the distribution curve, so you're above it just by a little bit. That's a continuation. So the prices from yesterday did not get accepted. We're still hanging above it. What's the next logical step? Find the next level, find the edge, the outer edge of the value area, wait for a retest, and that's your high probability market stalker's playbook. Value high reversal, touch and reversal. But mean reversion on those days is typically not a big opportunity. So, why would I get involved in something that can't even give me 2 times the distance of my stop loss? So I always have to have that. In fact, I want to have 3 times the size of a profit margin in relation to the stop size that I want to use. If it's anything less than that, and it's up to you whether you're going to take it off at 1 hour, 1.5, 2 hour, or hold it for the entire 3 hour, which is usually not that possible. Because in the cases of entering based on something that has already happened, your 1 hour is probably already going to be, like for example, if I was going to go short here, on the basis that we had this reversal, just a hypothesis, just like we're just talking, it's not a real trade. Let me find, here we go. So let's say I wanted to go short, right? Well, on the basis of this, how much space do I have down to Asia? Not that much. Like maybe you'll squeeze out like 2R, but just barely. However, what is this? So does this whole move have 3 times 55 ticks inside it? Yeah. But my stop here is already 1R. So what's left? Well, just under 2R, right? So that's your profit margin, the distance to the next available pain point. And then, you have supply and demand areas in a higher time frame that don't necessarily go to the full highs and lows, but instead they use the edges of wherever the market shift point turned around. So for example, if somebody says, oh yeah, we didn't even tag the highs there. No, but we tagged the supply. And this is the difference between how price behaves on lower time frames versus higher time frames. Higher time frames will typically respect the highs, and they won't go to the extremes on most days. But they will use the market point shift. So this is the market point break to the opposite side. So there was an equilibrium, there was a base, there was a base, there was a base, and then we dropped away, and we stayed away from it. Ergo, creating a supply, a technical supply. So am I going to be surprised that this didn't touch the high? No, that is the expected behavior. But when we're talking intraday, so much noise. So any highs and any lows become liquidity grab points. Does that make sense? I know I threw a lot of things at you there. Radoslav says, seems like I had my Muppet moment yesterday during my short in silver from 61.3. Mr. McTilt grabbed me, and I was not able to grab maximum favorable excursion to the low of almost 60.5, taking only 0.05. Hey, at least you took some profits. At least you didn't totally let it go against you. So let's have a look at that. So 61.30. There was this one, right? Yeah, you see, I looked at that and I actually saw the positioning and I decided that I was actually going to wait for 61 to hold and to go long. And then I gave back. I wasn't up much before we went into the group coaching session yesterday. So I was up maybe $170, like really nothing. To me, that's almost like a losing day, because it means that the trade didn't do what it was supposed to do, and I only took a little bit. So the next one, I decided to go long. So we had a nice sort of 5-minute reversal from 61, but then they shook it out further. So I closed it early, didn't like the fact that it started bleeding below 61. That was my orientation point. And then I killed it. So then I didn't trade silver at all. I instead went to trade copper after the rate decision was announced. Same idea, right? It was exactly the same idea, but just to me it was a better product, calmer. Silver took a little while. I mean, arguably they did the same move, right? And you can say that this one was even bigger. But to me, calmness of me in a trade is more important than me grabbing like a million ticks because silver is moving crazily. So, you know, that's just me. It doesn't have to apply for everyone. But yeah, calmness in a trade. Where is your stop? Yeah, it was a great idea, man. Like short from 61.30, amazing. We had the edge of initial balance there, and I think we also had the value high from the previous day. Yeah, so here it is. Let's analyze that trade. It was a great trade. So value acceptance failed. Why? Because we accepted value but went nowhere. This was the value. So in the case where we open above value, then close one 30-minute candlestick inside it, it's expected to rotate to the opposite side of value. Now, obviously, silver is in a huge uptrend, so we're immediately trading against the trend. But does that mean there's no intraday trade to have down to this point? No. And in fact, if you see it, now, hindsight capital, we're hiring. It was a beautiful trade, right? So we tagged let's see where the initial balance was yesterday. 130. Okay, so that was, let's actually mark that with a ray here. So 130, here we go. That's COMEX, right? And then IB low is the next 30-minute low. Sometimes the IB low gets established in the same candle, but I suppose that was kind of the case here. So what happened? There were two reference points. Previous area of value for either a bounce or a run through it, and initial balance. So two areas. So what did we do? Here we go with the value acceptance. Already in the first 30 minutes of COMEX, accepts value. But then it does a test of the conterminous line, sells off again, but doesn't make a new low. The next one smashes down. Then we have the 3 p.m. reversal, so post and my cut reversal. This is what I teach in my Pro Dev program. So we don't get involved here because that's dangerous. And then we have what? We have the London close. What do we expect? We expect yet another fade, typically. So what does it do? Tags initial balance, seemingly accepts the initial balance, but it's too late in the day for that. If they were going to do a failed auction, it should have happened already. And we also have a normal day type, where the extension of the initial balance is pretty much the same size as the initial balance. I don't like those setups for a failed auction because I feel your risk would have to be all the way down here for longs. So what would make sense? To tag the value high from the inside and to then reverse yet again. And then you have an intraday scalp, almost down to this low. So you nearly got there. But even with FOMC, they stood their ground. The low is still in. So I would actually call these equal lows. At some point, they will be up for grabs. So on a day when we start to run lower, mark your charts with 6565 as equal lows, because they love taking those out. It looks like a good support, but oh my God, do the dealers love taking equal lows. They're like, yes, money. Because most people, what will they be doing? They will be entering their trades like this, right? Oh, my stop is below the low. But you know how I like to enter my positions, if I can help it? Like this. Maybe even like this. Like, you know, huge advantage at waiting for the sweep and then grabbing it. But I use it with the help of tape. You can't really do those sorts of moves unless you're watching tape, because you won't be able to see what's going on. In cases where they just keep running lower, then you'll be in a lot of trouble. I don't like to guess. I always use some sort of an aftermath event to see what is going on. So to me, tape is all about see an event, what is happening after. See a sweep below the lows, for example. Are we continuing? Do we stop? Do we have a delta divergence? And are we getting big bubbles to the opposite side that are becoming consecutive? So what is happening after? Never mind what is already there. That's an order flow event. How you make use of it is to ask yourself what comes right after. That's, to me, that was a game changer when one of my mentors gave me that as a, because I was struggling with tape. I didn't get it. I was like, I don't know. I don't see anything. And he said, well, what did you see? And I said, well, I saw the lows getting smashed. And he said, okay, what happened after? I was like, well, I don't know. And he said, well, did they come back into the range? Did you see more buyers stepping in? Like, what happened? And I'm like, yeah, there were buyers stepping in, but I don't know whether it was with size or not. And that's what Bookmap really made a difference for me, because you can see them. You can see them. I'm a very visual person. This thing, yeah, it's helpful to look at like iceberg orders, but I don't like looking at just like pure random numbers that are just flying in front of your eyes, and it's like, what what do I have to remember? It's like I've got enough things to remember anyways. I'm at capacity. My RAM is full. But Bookmap solves that issue. So whenever they're equal lows, they will be up for grabs. That's the only certainty that I can give you here. The equal highs and equal lows will be taken. And in a way, you can look at them as poor highs, poor lows. And that always makes me laugh, because whenever I say that, it's like, poor lows, poor lows. It's a concept from market profile. They're called poor lows because they stopped and then the price kind of ran away from it. And even Dalton says that poor highs and poor lows are weak structures that will be taken out. Whether today or the next day, that's another matter. But yeah, every time I hear that, I just laugh, because I'm like, poor lows. Poor lows. Should we start a fund to help them? Are they okay? Are they okay? It never stops being funny. Yeah, market footprints. I don't use footprint. I do use profile and Bookmap. So Bookmap is just like a visual representation of tape. That's all it is. And it has historical events. Whoopee. Vladislava says, I actually lost my edge in blue accounts when I started using footprint charts. I'm not surprised. Like, footprint is great if you're just a selective scalper, right? So if you're just looking for a very, very particular moment, let's say an iceberg order, or maybe hunting the big orders on the tape, just grabbing a few ticks and that's it. That never worked for me. I'm not happy. Like, my soul isn't happy until I'm able to grab at least, like, if it's a trend day. If I haven't grabbed 30 to 40% of that move, or even more, like for example on copper, that move yesterday, I grabbed most of this. We had a little bit of fight around VWAP, but then I grabbed, I think I went in somewhere just sub VWAP, and then I grabbed all of this, literally all of that. So what's that, 60% of the move? So that, like, if there is an opportunity to do that, that's where I want to be. But at the same time, silver going on a run the other day, so we entered, you were here, so we were entering during London, so I entered longs here, and I waited. And then by the time that we opened COMEX, I had a little bit of room, And they just never tagged these lows. They never. So I was never in danger. And then I took it off at 59. Why? Because that day I had the ADR high just above 60. And I didn't want to be in a situation where they miss it or whatever. And then it ran. Then it completely ran. So I took my 2R multiples, but I didn't take most of the day. Should I sit here and just go, boo, it went to 63? No, because 63 was never on my, or 61, whatever it was. 61 was never on my plan. Never. 60 was, but 61, I thought it was a bit, you know. So when it started running, I didn't experience FOMO. I just said, okay, good. I still took 30% of the move. I'm happy with that. But if I'm taking like, 2% of the move, which is what typically scalpers do, 1 or 2%, even less than that, I'm not happy. I'm like, but this, the move is just starting. Why are we exiting? And this is the swing trader in me, because I was a swing trader for over 5 years before I even went into intraday. So I know that I'm very good at figuring out a swing opportunity versus a scalp opportunity. And even my scalps, they're 30 to 50 ticks. They're no less than that. But that's me. I'm very selective. I don't trade a lot. In fact, on the day where I do like 15 trades, I would consider that an overtrade. And I would be like, D, we need to chat. The animal needs to go back in the corner. But some people are like, oh, I did 50 trades, and that's like a normal day for me. I'm like, that's so much work. But why? Especially if it's like a trend day. It's like, what are you doing? What? You're just jumping in and out, in and out, in and out. And actually, one of the guys that I worked with in prop, he was a bit of an a-hole. I'm not going to lie, didn't like him. But he had a point. So when I first got into intraday trading, I thought you're supposed to get in and out, get in and out. So I was doing that, and I was making a little bit of cash, losing some, winning some, losing some. And then in the end, it ended up being a very nice move in one direction. So after all of that, me jumping in and out, I end up with, he asked me, all right, so after all of that, how much are you up? And I looked at my net result after the commissions and everything, and it was like, I don't know, maybe 16 ticks or something. And then he was sitting down kind of all smug, and he's like, yeah, well, while you were doing that, hopping in and out, I stayed in one trade, paid only one round turn, and made 60 ticks. That, obviously I didn't like him saying that to me, but he had a bloody point, didn't he? He was like, what are you doing? Doing all that work for what? It's the same move. Stop jumping in and out. Just sit in one trade and breathe. And it got to me so much that I was like, you bastard. I'm it's you have a point. You have a point. That's why I hate you. And then I decided that I'm going to work harder on not grasshoppering out, because I didn't want that comment to come across my way ever again. So he was not a very nice guy, but he did me a huge favor. That's when I started looking into markets in a completely different way, and more in a swing trader way. So I carried over what I knew from the swing trading side and tried to modify that. It took me a while. It took me 2 years to properly hone it in. But once I had it, I was like, I know what's my scalp. I know when to scalp, when not to scalp. I know what's a trend day. I know what's a medium auction day. Because sometimes you have days where they sort of go in one direction, but they don't really end up as trend days. They're very rotational, but they still kind of go up or down. So yeah, it was very eye-opening. Very eye-opening. I don't think we have that anymore, because nobody on the internet is going to tell you the truth. Because first of all, nobody can see what you're doing. You're watching these streams, you can see what I'm doing, but I can't see what you're doing. So I can't make a comment on what was that, right? And actually, there was somebody on Twitter who was saying, if you looked at your last 50 trades, would you hire yourself as a trader or fire yourself? It was, again, a very good point. Look at what you've done over the last 50 trades. Would you hire yourself? If you were the risk manager, would you say, this is good, I want a piece of that? Or would you just go, hell no, not touching this person with a barge pole, too much size, too much variability in the P&L, 2K up, 1 down, 2K down next day. Then we have a 4 grand where you sort of get ahead again. That's a lot of variability. You're not supposed to have an equity curve that is that volatile. And nobody is going to touch you to put risk behind you if you're just swinging up and down. And yet the overall result has a negative expectancy. So it has to have positive expectancy, it has to have low variability, risk first. I know many people don't want to hear that in retail, they just want to make money or whatever, but making money with money takes extra care towards risk, and that's when it comes. It's not the other way around. Otherwise, you'll be one of those people that makes a lot of cash, and then we never see them again after 2 months because they blow up spectacularly and they can't come back from it. And then they end up making 5 grand in a year if they're lucky. Even with all of that up and down, big size, big lot size, a lot of drama, net from all the combines or the evals they purchased and blown up, it ends up being either negative or let's say 5 to 10K positive on the year. It's like all that stress. Wouldn't it be easier to trade with smaller size, less variability, and something that can sustain you for years to come? But what do I know, right? You do you, man. At the end of the day, it is your money, it is your combines, it's your XFAs. I just know what didn't work for me. And you can try it the other way, but I've had 2 seasons of VIPs where for 2 months I'm like talking to a wall where I'm saying this is not how you do it. Don't try to pass it quickly. You need proof of concept before you get into a funded account. You need to prove to yourself that what you're doing is sustainable over long periods of time and that you can weather a drawdown without panicking and that you know when to size down. So here's the difference between pros and retail. Retail sizes up in a drawdown and trades more. Whereas those of us who have been in the game for a long time, we get into a drawdown, we trade less, and we size down. Completely opposite. Completely opposite to what most traders are doing. That's why most traders fail. Because they're like, well, I don't know how you're doing it. It's numbers. It's just numbers. Yes, it's emotional control as well, but when you really crunch it down, literally it's remedial math. Keep your biggest days, keep your positive days bigger than your losing days. Keep your losing weeks smaller than your winning weeks. Yeah? The end. It's not rocket science, really. There's a lot of moving parts to it, but you don't need a PhD in, theoretical physics to make trading work. At the end of the day, it's limiting the number of trades you do, taking systematic setups that have worked for you previously, so they're statistically proven, and then keep pushing. Are there discretionary traders that do well? Yeah. How many of them are pros at the top of their game? Not that many, if any, actually. Any successful trader that I know, they have well-defined playbooks. They know their risk. They know what their setups look like. That's not discretion. That's method. That's, it's method trading. Is there such a thing? Method trading. So yeah. Vladislav says, full port YOLO is fun though. No. Full port YOLO is risk will not touch you because you're not serious. So imagine it, like let's get out of trading. Let's say you're a surgeon. You love surgery. But you're not very good at it. However, you love cutting. Do you think patients will trust you after you've, massacred a few people? Is that going to be serious? No. But because this involves clicking buttons over actual physical stuff, people are like, oh, doing stupid things and gambling is really fun. Go to a casino. Don't do it in the markets. You have a lot more fun. You get free drinks. Get hot chicks walking around. You usually have a show of some kind as well. Much more fun to gamble in an actual casino than doing this. Okay? So if this is your idea of fun, I would, full porting a position. I would question the quality of your life standards. I don't know. To me, my disease has limited my ability to socialize completely. And trading is fun, but to me, making money is more fun. And not in a reckless way. If I can be disciplined and I make money as a result of that process, it makes me feel good inside. Every time I see people full porting and making money from that, it's not repeatable, because the next time you try it, it's probably not going to be the same market conditions, so you're going to blow up. Not nearly as fun, right? Oh, look, I've blown up a new XFA. So now it's going to cost me, what, 700, 800 to get back to funded? Or I'm going to have to invest more time. Is that fun? To me, no. But what's fun to me is to play detective, to go in on a smaller size and still make a killing. That's fun. So I don't know, I would, and fun for me is also video games. Fun is having people over for dinner, talking, that's very fun. Fishing for balls in the park, that's kind of less fun, but also hilarious. Because, you think that on a dog walk, you're going on a dog walk. But with 8 dogs who all love balls, and they all have their own, but then they also steal them from each other and then they drop them at random places, you think that a walk is just, I'm going to go walk my dog. No. We go for an activity that's called, where's the ball? Find the ball. Crichton dropped the red one. Oh, Bernie took it to the mound. Let's take that one. You look there, I'll look there. That's what our walks are all about. It is fun, and it definitely takes you outside of the trading mindset. But, I don't know. For me, fun activities have a different attachment to them than just, full porting. That's just me. Again, we're all different people, so there you go. Too much information, so many balls. Absolutely, yeah. Yeah, Blue Boy, always with very, very good comments. Full porting is training a bad habit. You won't ever really win the game. Couldn't have said it better. Training a bad habit, yeah. So let's say you're training to be an athlete. Again, let's take it out of trading. Let's say you want to enter an amateur bodybuilding competition where the body fat has to be low, but the muscles have to be full. If you're eating like it's a cheat meal every day, but you're still working hard going at the gym, do you think you're going to get the same results as the person who decides that there's a bigger goal than eating yourself to death as if every day is a cheat day? Who's going to have a better body, and who's going to have a better chance at winning the plastic trophy that you usually get at the end of those competitions? It's going to be the person who understands that there's a higher goal, rather than just, eating fried foods and pizzas is fun. Yeah, it's fun until you get diabetes and until you realize that you've messed up your health because you've been eating like it's a cheat meal for 20 years. So now you have high blood pressure. Now you look like shit, usually. And you're so undisciplined because you've never developed the good eating habits, the good nutritional choices at certain times. And look, being undisciplined sometimes is fine, it's good for your mental health, but please do them on a practice account or do them in a combine that doesn't matter to you. Just don't do them in XFAs, don't do them in live accounts. It's not worth it, it's too much risk. We're supposed to be risk takers, but also risk managers. And I think that part, despite the amount of coverage that topic gets, it still goes over most people's heads. Just like, yeah, I'm a risk manager. Full port, FOMC, boom. Oh shit, I lost another XFA. Yeah, fun. Or you can have the other side. Oh my God, I just made 60 grand. And then the next day you lose half of it. And then over the next several days, like we've seen them on Shoulder Tap, right? A guy makes 140K in one day. And then in the next 42 days, he carried on, he increased his daily loss limit and carried on losing after day after day after day after day for 42 days after the big day. It's like, what do you have to do to hit the daily loss limit that amount of time? And of course, he lost 90% of that money, unfortunately. So it's like, don't be that person. Like, why? I don't get it. Just build it up slower. You know, I have a tattoo here that says haste makes waste in my mother tongue. And I always have it there to remind me that if you're patient, good things come your way, and that not everything has to happen right now. So delayed gratification is a huge, huge skill to have, and one that will serve you well. Unfortunately, no trades. Copper is kind of moving, but again, it's away from any pain points here. What's gold doing? Gold's still nothing. Like, look at that. So right now, copper actually doesn't look that bad. But I would like to retest these Asia lows. So I'm not getting involved in the metal. Silver, same thing. Let's have a look at crude oil. Even though I don't trade crude oil actively, I do look at it as a benchmark. So we have some buyers, big buyers, at 57.50. Then I like to go to the options. All right, so 57.50 is actually the bottom of the implied volatility for the day in the options chain. But we also have a put support area, so put wall down at 57. I don't like being long crude oil. I really don't. I want to be short on it. Maybe if we get to Euro close and we're still sitting around these levels, maybe sitting around 57, there could be a long there into the Euro close and then cut that trade and then wait for another run lower, because this is looking like a trend day down for now. So yeah, whatever the Euro close does, I would then fade that into settlement if it's on a short side. But longs in crude oil, to me, apart from like a few isolated days that just going to keep going, you will see that most days upside movement is very limited, whereas downside is beautiful. And this has been the case for years now, like probably like, I don't know, at least 2-3 years. So if you look in the weekly chart, so this is a tight range. We had a slightly bigger range during tariffs, but still, you know, yeah, you had 3 weeks of it going up, but then they erased everything. This was definitely tariff effect. On all other times, it's either range bound or any sort of a big move up quickly gets taken completely. And if we go monthly, that looks even more range bound. So you zoom out completely. This was COVID, so we went negative, then we came back up to 50. Well, we came back up to 140, I think it was, or something. No, 120 was the top. I'm thinking of 2014, when we had 140. But yeah, since then, look at it. So to me, crude oil is options only. Typically what I will do, I will wait for the edge of the range, and then because I don't like being long crude oil, I will do a long call option because it has a limited downside. But whenever we get up here, I absolutely love selling options because I know it's going to go down. And even if I have to roll it a couple of times, I know it's going to, you know, make a killing. So yes, sometimes I do naked options on crude oil, which is risky, but hey, to me that's an acceptable risk in light of what I know is true on crude oil. But when it comes to outrights, I trade RBOB and heating oil. Natural gas is a different product, it's also an energy, but sometimes I trade that as well. Haven't been able to find a good long because this is a seasonal trade on natural gas, and we should be long, but they keep smashing it down, so I'm not exactly sure what they're trying to do. And anytime it attempted to go higher, this is the daily chart, they smash it down. So I don't know, maybe the edge of this range could be it. These are equal lows on the daily. So maybe if we get down to 440, maybe I want to pop in a long on natural gas. Other than that, it's not really, yeah, it's not looking great for a seasonal trade, to be honest. All right, that's going to be it. So unfortunately, no trades, but I think we may have had a decent class. Whoops, there I go with the full silver again. No, D. Yeah, let's see what this Thursday brings. Post FOMC. Might be a hangover day, might not be. Remains to be seen. But yeah, so I will see you next week on Monday, as usual, for the Euro trade. Until then, work on your trading gremlins. Try to rein in the Muppets. Lock them up in a cage somewhere. And if you must full port, do it on a practice account. That's all I have for you today. This was the Euro Trade on TopstepTV. I'm Marcus Stoker D. Enjoy the rest of your day. Take care.